Now, just quickly, there is a possibility we have a December top if these signals remain bearish. Volatility has spiked, come right up to the trend line right here and slammed on the brakes. Okay, and again, you got to get above the signal line. You got to get above the trend line, stay above those levels, and have the S&P trend direction remain negative. Again, I told you this went briefly negative last week. It's remaining there this week, but now we're getting the volatility spiking above the signal line. Now, it could just be something like over here where we get above the signal line briefly and below in negative territory with the trend direction, but then recover. Volatility drops back down and the trend tries to resume. So do we see something like that? Again, I'm going to be watching. We go into next week. Do we try to get a reversal at some point next week, maybe with the inflation data, end up getting a bigger sell-off, possibly end up validating a December peak? I still think we're in a wave 4. Video all the way through, you'll see why. Again, in order to top, you got to stay above the signal line. You got to break the trend line. Volatility has to rise like it did over here in 2022. And you got to go into negative territory and then remain there with the trend direction. Not just do it briefly, as we did over here with corrective moves, but you got to have the staying power like you had right here. So again, watching this closely, if we start seeing the volatility oscillator drop back down, we start seeing the trend direction move back to positive, then it will mark this as a corrective move. I don't think the S&P blow off top is done yet. I still think we're going to go higher, but it could be. And I'm open-minded to that. Still think we reach that trend line in the weekly time frame on the S&P 500 in all likelihood to diverge with the Russell, which we have not done yet. Now, I told you if the S&P moved down to fill the other two gaps, S&P did fill one. We still have another one below at 57.83. Be watching to see if the Russell ended up getting, again, another reference point of a divergence. We had a little divergence develop on the Russell. We got a bounce, stalled up the 20-period moving average, and then I told you to be watching the trend line and the 200-period moving average. Again, I think that we could see a bottom soon, attempt a recovery where the Russell ends up getting a lower high and the S&P makes a higher high. But I'll be watching this divergence on the Russell. Again, it was a negative divergence that tipped us off to the sell-off to begin with. We had this little bullish divergence where we got a bounce, but I warned you, again, we still may hit this lower channel line, which we're doing now. And again, you have your 200 period just below that. Russell daily chart here. I think the Russell's going to get a bounce, but I think it's going to make a lower high. But like I say, we could still go beyond that 200 period and overthrow this trend line a little bit, but we are tagging it. It's the trend line I keep talking about in the weekly time frame. Here's the same channel, but only in the weekly time frame. Again, we're tagging it. We're below that 20-week moving average. Again, just like over here, we took out the 20-week, but then we attempted a feeble rebound and ended up diverging with the S&P. The S&P moved to a new high in 2022. The Russell did not. You're likely going to witness the same thing. I think that the Russell has peaked. We are seeing the RSI dip into the 50 level. We'll be watching if it stays there, if a recovery. Again, we'll be also watching, do we break the trend line and end up getting a more feeble recovery? But again, could bounce surrounding this trend line on the Russell. Positive divergence developing there in the daily time frame, a triple bullish divergence. See if we buy a little bit more time with the Russell. Should we try to bottom here or a little bit lower? If we start taking out the 200 in the daily and again staying below it, we might just get a feeble rebound. If we hold below the 20-week, again, we might just get a more feeble rebound and not get much of a recovery, or go lower and still, again, get a feeble rebound. I'll be watching the Russell closely to see if it diverges with the S&P 500. I believe the Russell has peaked. I don't believe the S&P 500 has. The NASDAQ's a wild card, a question mark. You got a shot at the Dow having peaked, as I've talked about, but again, the Dow turned off this trend line in the weekly time frame. It overthrew the monthly trend line, but it could also still rally back up and diverge with the transport. So again, it's kind of a question mark as well, but you got a shot at a top here anyways with the Dow. And again, it was a divergence in the daily time frame that warned us of this sell-off with the Dow. I talked about that at the very top when we slammed up into this trend line, which we talked about back at the time. I think we are in a topping process because we have this massive divergence between the Dow and the transports. Again, if we see a recovery here in January, again, I'll be watching. Do we end up seeing a divergence develop between the Dow and the transports? Or maybe the transports goes higher and the Dow gets a lower high. 2022 top, the Dow made a higher high, the transports made a lower high. I think we'll get a rebound back up and we could see them diverge. Dow does make another higher high, we'll probably move to that trend line and peak out. I think the Dow, again, is possibly topped, but you still could form a divergence here with the transports with the next rally. If we get the January rally, I think is likely. Again, like the Russell, we saw the Dow sell off with the divergence, and again, keep selling off. You got the 200 period down here. So again, we'll be watching. Now down 7.25% on the Dow. The Russell is down 11.7%. So we're moving closer to 12% lower. And again, the 200 period directly below. The Russell's closer to it than the Dow. Both of them have had significant sell-offs. We'll be watching to see if we can attempt a recovery or not with the bullish divergence that's developing here on the Russell. Dow has the same divergence that's developing there on the RSI and on the histogram. So again, if it plays out, the MACD could get a bullish cross soon. But again, do we continue lower to the 200 first and end up getting a bigger sell-off, or do we attempt a recovery just drifting a little bit lower? We'll be watching to see what happens with the inflation data. Go a little bit lower and get a bottom with it, or do we go much lower and get a bottom with it? But the Dow and the Russell, at big sell-offs, we're likely going to see a recovery attempt made, and I think that will take the S&P to a new all-time high, where it will diverge with the Russell, and we'll see what happens with the Dow and the transports. Now, again, I'll be watching if the S&P makes a new high. Does the NASDAQ join it or not? And I'll be watching NVIDIA's influence over the NASDAQ. Does NVIDIA go make a new high? I do believe MicroStrategy will, which again is the NASDAQ's exposure now to Bitcoin. MicroStrategy is now on the NASDAQ 100. And if they start going higher, then NASDAQ could, or if one of them starts going aggressively higher, NASDAQ could join it. Again, do we have a wave 4 here? Do we have a pullback? We're hitting the July peak. S&P is still above it, but we've hit the July peak here for the NASDAQ. Below that, we have our 100 period moving average, and we have a gap fill from the presidential election down here at the 20,227 area. I keep breaking trend lines and then trying to get back above them, and I've drawn some different ones here. Currently, we've broken now this trend line, connecting these two lows right here, and that's taken us now to horizontal support. So we'll be watching our cloud. We're testing our cloud here, the trending cloud, and the 100 is directly below horizontal support and the gap fill below that. Had NASDAQ go higher and form this divergence when everything else, Class B divergence there, 2 equal peaks on the RSI, price moving higher while everything else was selling off in early December. NASDAQ peaked in mid-December, at least so far. Again, MACD is right here, just barely in negative territory now. Again, it's been positive with this run-up. We're going to be watching. Do we firm up here with these MACDs and get bullish crosses and try to get a recovery or resume the advance to new highs? We go negative and remain there and get a bigger dump. So again, we'll be watching to see how it unfolds here with the MACD on the NASDAQ. Now, like the S&P, the NASDAQ is coming back and filling the January 3rd gap here. We gapped higher on January 3rd and got the rally back up here. And now we've turned back down. We've gone a little bit lower. And if we continue to go lower again, break the July horizontal support, you've got the gap fill from the presidential election at lower levels. We'll see if we fill it or not. You've got these divergences going on, forming here on the MACD, on the RSI. Again, they may not be done yet. We still may go a little bit lower. It's possible that they finish at some point, maybe early next week, Monday, Tuesday, possibly Wednesday, and then we begin to see them play out. Give us a January rally. We'll be watching. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts and indicators, please let me know that by supporting the channel. Follow the link below to take you to a secured site. You can donate any amount you want. If you could take just a moment to do that, I would really, really appreciate it. I don't have any sponsors, just a direct relationship with you. So rather than trying to sell you a bunch of stuff, I just ask that you help out just a little bit. And I would just rather do that than have sponsors. So I turn all those offers down. They constantly contact me and I just not interested. Too many shady deals on the internet. Please take a moment to support the channel. I thank you for your consideration for that. Watch the video all the way through. Important stuff coming down. We're about to get the final climax rally to the blow off top. The final dip before the blow off top. As we're coming down to this trend line and towards the gap fill, then we are moving back down on stocks above their 20-day moving average. We had this divergence that gave us that the divergence with the S&P that gave us the bounce back up. Warned you, if we didn't get traction back up to flip signals back to bullish with momentum, there's still risk of going downside. And again, momentum is still bearish. It flipped the Fed day. Fed reduced the amount of rate cuts expected for 2025, down from 4 down to 2. So I think you could form a triple divergence right here. And again, we hit these single digits. I think you're going to get another higher low here early on next week. And then I think we're going to probably bottom out, probably Monday or Tuesday or something, maybe Wednesday with the CPI. But I think you're going to bottom out and start a rally ahead of Inauguration Day. Likely see momentum signals flip back to bullish. And again, I think you can rally going into the Fed meeting over the next 2.5 weeks once we bottom out. So we'll be watching. Now, stocks above their 50-day moving averages at 17. There is no divergence here like stocks above their 20. But again, it doesn't have to be. We could just reach extremes. Probably reach single digits or the high teens, one or the other, 13, 14, something like that. Move into single digits, one or the other. And then again, off of these extremes will likely form a bottom. There's no divergence right here. The S&P up here, there is. With my oscillator, with stocks above their 50-day moving average, it is diverging with the S&P. S&P is moving to a new low. It has a series of higher lows. I also think fear greed is going to form a divergence here with the S&P 500. We're at levels of fear here. Obviously, we're at levels of extreme fear. And I think it is also, if you look at it here, I think it's also forming this multiple point divergence with the S&P 500. So I think you could see a bottom early on next week, maybe Monday or Tuesday, possibly Wednesday, start to rally back up as we go towards Inauguration Day. And again, that could be a continuation of the election rally. Big, powerful rally back up, complete the blow off top. Now here is the fear greed index in blue with the S&P in red. And here, I think we're getting something with this divergence, this multiple point divergence that is probably under construction right now and probably going to finish next week. I think you're going to get this pushback to fill that gap at 57.83, and I think we'll stay above the horizontal support in all likelihood, but I think this is going to create a bottom. Now, at the July low, we had reached extremes, but back over here at the 2023 October bottom, we did the exact same thing we're doing right now. We sold off in late 2023, continuing the summer sell-off of 2023, and in red, the S&P moved to a lower low in October, and we bottomed out, but yet the fear greed index got that higher low. And again, I think you're doing the same thing here. I just think you got a triple divergence. These divergences play out over and over again. Over here, we had this divergence right here give us the July 2024 sell-off down to the August low. We had the divergence between the two here where we saw, whoops, wrong one, here, where we saw the divergence between the two, and that gave us the late March peak there, and we sold off earlier in 2024. And again, if we go back further to the left of the chart here, we would see the other divergences that led to other sell-offs. So a divergence. And then here, currently, with our December high, we had that divergence plus the December 6th peak on the S&P 500 that led to this decline right here. And that's led to the fear greed index becoming down here to extremes. But we reached extreme fear. We may reach it again. but I don't think we're going to take out this low, and I think you're going to get a divergence, much like what we're looking for, I should say I'm looking for that stocks above their 20-day moving average. For triple bullish divergence to conform there. Very similar here with the Fear Greed Index. Now, again, we may see some divergences develop. We got little ones here on the 5-minute chart right here. It may be that we form a larger one surrounding the gap fill with the election. In order for the S&P to go higher, we got to get back above our 200 period here in the 5-minute time frame. To get the 50 back above the 200. Now, again, we could set up a larger divergence if we go down and fill the gap at 57.83 there on the daily chart and the 60-minute chart. End up setting up some divergences here in the 15-minute time frame on the MACD, on the RSI, like some of these other divergences after we broke down from our triangle here. This trend line is important too because we keep turning down off of this trend line. We did it here and then we did it here, tried to inch above it there and couldn't do it. So again, I'll be watching to see if another divergence develops early on next week, maybe Monday or Tuesday here on the 15-minute chart. And if we try to carve out a bottom, and that could take us down to the gap fill or hit 57.83 here on the 60-minute chart. And again, this is the gap that was created by the presidential election rally. We got the results of the rally and the market skyrocketed, pulled back to gap support, and then continued on until the December 6th peak. Could see that rally continue surrounding Inauguration Day because we've gotten the sell-off now ahead of it. For 10 weeks now, we were not able to rally up to the upper channel line on the S&P weekly chart. We fell short of it here with this rally, fell short of it here with this rally. Here in November and December, these two peaks fell short of that level in the weekly time frame. I still think we're going to reach that level. So again, I'll be watching this with great interest as divergences look to be forming with triple divergences. This divergence gave us a bounce to the 200. This divergence might give us a reversal with a triple divergence here on the 60-minute chart. We'll be watching, and up here on the RSI as well. We got it on the MACD and the RSI. This divergence gave us this rebound back up to back test the triangle. This divergence gave us this rebound back up to test the 200 and the trend line. This divergence might give us a reversal. Live it, love it, learn it. Going back to this chart, again, I'll be watching with great interest the gap fill right here, and we were just, shy of it there on Friday. We were in the low 5,800 area. What was it, 5,807, I think the low was, and here we are just a few points away from filling that gap. So again, I'll be watching, and if we bottom early on next week, or at this trend line right here, if we try to rebound, I'll be looking, but it looks like we want to go just a little bit lower, probably to try to fill that gap. Then I think that we could get, again, a repeat of what we had over here that could take us up towards whatever channel ends up developing here, and we'll have to wait and see where the dust settles. Rid of some of these trend lines, but like I said, again, I think we broke these trend lines right here in order to create a larger channel. And I do think this is an ABC move in all likelihood, and I think it will be followed by the final climax move on into late January, maybe early February or so. And if we attempt to form a channel and we move up to the upper boundary, wherever that may be, wherever the dust settles, and I'll draw boundaries. Now, if we go lower, I think we'll slam right into this trend line right here, and we're just slightly above it. This is the log scaling right here. We're just slightly above it right now, testing our 20-week moving average there. If we can bounce off this trend line right here, I think, again, we're going to go back up into this upper boundary of this channel. Look at this over the last 10 weeks. Look at this. We finally hit the trend line in the monthly time frame, and I told you that was the last day of November, and I told you to be watching the November rally to see if we could reach this level. We didn't do it, so I told you watch December. We came short of it there in December as well. And again, we had the December now sell-off for over 4 weeks now. We've been declining for 5 weeks. If we could bounce off this trend line, I think that you have a good shot. Again, we're still going to get the final climax move, the final phase of the blow off top, and I think you're going to go up here and hit this level. Now, if we hit it late January, you're going to be at that 60-40 or 63-41-42 area. Again, the trend line is my target. We came pretty close in November, December, but it was close, but no cigar. So again, I'll be watching this trend line. I still think we're likely going to reach it. I still think we're probably going to see the S&P RSI turn back up and get one more push higher to form another reference point of a divergence. And it is multiple point divergences that give you a complete reversal. We have that here. It is possible we have a December top. I told you I thought we'd get a top in December or January in all likelihood. Or the December 6th peak is holding. But I'm just telling you, I still think this is likely a wave 4, and I think we're going to bounce and maybe off of this trend line early on next week. We still have the MACD with the bearish diversion. So again, that very well could give us a bigger sell-off. It's also possible we get a divergence in this most recent price action. And again, we've had rollovers back over here, but again, still ended up going to higher levels. So do keep that in mind. I'm looking for clues. I told you I'm looking for a top. Maybe that was in December. I need to see more evidence if that's going to be the case. But now that we're forming divergences and becoming oversold, which I think we're going to go a little bit lower and become even more oversold, stocks above their 20-day moving average with the fear greed index and so forth, so on and so forth. But again, we bottom around this trend line. I think it's very, very possible. Take out the 20-week moving average here, which we're slightly doing right now, but take it out and see the RSI start dropping below 50 and staying below it. Then maybe that's all she wrote. You'll get a 2050 sell signal. But I think we're still going to reach this trend line, and I think the trend line, and this goes back into the 2022 low here, counter trends in 2022. We look at our linear scaling. We have this trend line right here going back to the 2018 high to our peak there in 2022. It's pointing right up here. I think that we can go and we can hit that trend line. We do it in late January. Again, it's coming in that low to mid 6,300 area. If we take a little bit longer to reach it, then you're going to go a little bit higher, probably closer to 6,400 or on into 6,400 if it drags out. But again, this trend line, very, very close to the channel that I just showed you from the 2022 low over here and these counter trends that happened in 2022. Very, very close to that level. This is a log scaling. That was a linear. And they're both, and here's a linear again, they're both coming in that same area. So again, this is where I think we're going to see price gravitate to. And then I think the market's going to top. Could it have topped in December? Possibly. My guess is this is a wave 4 correction, and we're going to get the final phase of the blow off top. I think this will be the final dip of the blow off top. Again, this blow off top that has been forming here. That's how markets end. That's how bull markets end, is with blow off tops. Again, notice the S&P is just above this trend line right here. I think we're going to likely tag it and try to bounce off of it, this trend line, the weekly time frame. If we get a blow off top completing, I think it could come up here. If we finish a cycle top near January, we can reach this trend line right around 63.41. And again, it's a Fibonacci extension of 200% of this move right here. We had a 1-for-1. This would be a 1-to-2. Notice where it's at right there. It is intersecting with the upper channel line. And again, maybe we reach that in late January surrounding the Fed. 2.5 weeks from right now is a Fed meeting, or shortly thereafter, maybe in early February. But again, if we can get a big rally back up off of this trend line, this is where I think we're going, and I think that will complete a wave 5. But it would be a 200% Fibonacci extension of this move. It comes right in there at that trend line at that same level. Now, again, Elliott wave is speculation, and there are all kinds of different Elliott wave counts out right there. I have a couple myself. Just telling you, I think that, again, we're probably going to get a wave 5. I have a couple of different ones that, again, to suggest that it's going to come to a conclusion right here that, again, this is likely a wave 4 and we're going to get a wave 5, that we have a 5-leg structure higher. And again, right now we're in the final 5 waves of this count right here, which would be this move right here, and this 5-leg structure in that complete this whole thing of primary wave 5. So I think that that is likely the case, that we get one more push up into that channel line right there. Again, wave of speculation. Again, you could disagree, have different counts myself. Different count, I respect that. I'm just showing you this because, again, it looks to me like both Bitcoin and the S&P 500 are going to get this final blow off, the final climax move of the blow off top. Like it's going to be with this 5th wave up into their channel lines. Both of them failed to reach the channel lines. S&P is 10 weeks. We've going 10 weeks, and it didn't reach it. It's setting up for a final climax move. This is the larger count. This is the tech bubble top and the financial crisis, and I think you got a 3, and over here a 4. I think this whole thing up is a wave 5. If you're a big Elliott wave guy, and contact me and tell me, no, you're wrong, it's this one. Hey, let me tell you, the experts on Elliott wave don't even agree. There's a bazillion different counts out there right now. So-called experts are in disagreement. I rarely talk about Elliott wave. It is speculation. If I talk about it, I always get somebody that contacts me, wants to straighten me out and tell me their count. I'm just sharing it with you, and I have other counts, but this is what I think likely the case. I think we're going to get this final push higher. Now we have this trend line right here. I don't think we're going to reach it. Reaching that trend line in the monthly time frame and overthrowing it. We are overthrew it a little bit. I think we'll overthrow it a little bit more, but I don't think we're going to overthrow it by that much. I did use this trend line to call the peak there at the 2022 high, and that did play out very nicely. I don't think we reached that because of the monthly trend lines that I'm looking at longer term. So with the bull market, I think we've got a 1, a 2, an extended 3 here, a 4, and now I think we're getting this final push higher, and I think we're getting, of these 5 waves higher, I think this is the final one right here, and again, another 5-leg structure here, and I think that's going to be coming to a conclusion. Complete the primary wave and end the cycle, have a cycle top. Here's my long-term monthly chart, and you can see again the Elliott wave count here that I have, and again another count too, longer term. Here's the 1929 top, and I think that was a 1, and I think you got a 2, and then I think this whole thing up into the peak in 2000 is a long-term 3. Then I think we got a 4 here, and then on into the new bull market from 2009. I think that this takes us up to this trend line, which, again, we already reached. This was a trend line that we reached on Black Friday on the last trading day of November. Through it a little bit. I think we'll end up overthrowing it a little bit more, but I think, again, it's going to be very, very difficult to stay above that trend line. But I think you have this 5-leg structure for the bull market going into that level, and I think you're going to get a bear market that's going to take you back to this midpoint, probably beyond the pandemic low, or maybe as low as the peaks from the previous bull markets. And then I think you're going to get another bull market. And I think that's going to take us into 2026. I think that we'll have a bear market start in 2025. We peaked in December, late 2024, but I am looking for a top. We'll go into 2026. I think we'll get another bull market that will likely give us a lower high. And then I think that we'll get another bear market. And again, you'll have a lost decade like you did over here, where, again, you went nowhere for 13 years. Over here, you went nowhere for, what was it, 16 and a half, 17 years, whatever it was. Over here, you didn't make new highs for 25 years. By the time you made new highs, you're probably dead. The market has these long periods of drawdowns, and again, we're about to enter one where and that's what the high valuations, like with the Buffett indicator, they're telling us. Buffett indicators that, got it to be over 200%. More overvalued right now than at these other 2 peaks. You realize that based on the market cap to GDP. We're more overvalued than we were in 29. We're more overvalued than we were at the 2000 top at the bursting of the tech bubble. More overvalued than we were during the financial crisis, but we're not in a bubble. But those were bubbles, but we're not in a bubble now. Absolutely incredible. Again, I think this crisis right here, this sell-off right here, is going to be the crisis with the debt bomb likely becoming an issue in the early, 19 or 2030 or 31 or so, somewhere in there. Look, I think that both the S&P and Bitcoin have a very similar count. Now, just going back right here, going back to our current weekly channel here, if we rise up towards it here in late January or on into early February or whatever over the next few weeks, I think you're going to complete this wave 5. I think Bitcoin's going to do the same thing. It will reach its upper channel as well. Both of them have a 5-leg push higher off of the 2022 low. I think both of them have a 5-leg structure under construction right now with these minor waves that will complete the intermediate wave count here of this 5-leg structure that will complete the primary wave, complete the cycle high. That's why I think this is a wave 4 and we're going to get a wave 5. Bitcoin has a very similar pattern, have a positive correlation. Again, I have a couple different counts on Bitcoin. I think we're moving towards this upper channel line of this larger channel from these lows over here. And I think we're going to reach this trend line where it intersects with this upper channel right here. Same channel we have with the S&P. I think Bitcoin will get the blow off top around 120 to 125,000 as S&P moves up towards the 6,300 range, maybe, the low to mid 6,300 level or a little bit higher if we take our sweet time getting there. Line is a target. Same thing here with Bitcoin. The trend line is a target. Weeks and weeks have gone by where we haven't reached the trend line, and then we got the sell-off. Bitcoin peaked also in December, mid-December, sold off, and it's amazing. S&P and Bitcoin both formed head and shoulder patterns. They're both hovering at support. They're both at the VWAP support levels. It's pretty remarkable. Bitcoin has a positive correlation with the S&P 500, and again, I think we have a 5-leg structure here that, again, likely going to come to a conclusion here. I think we're in this final 5th leg here. I think we're completing wave 4 just like the S&P, and then I think we get this final push into the upper channel that intersects with that upper boundary, and then I think you see Bitcoin collapse. I think you see the stock market collapse. So I think we're getting this final, same thing with Bitcoin. I think we're getting this final 5th wave in this 5-leg push higher here, in this larger 5-leg push higher here. I think that completes the cycle top there for Bitcoin, and that's going to take Bitcoin to about 120 to 125,000. Again, depending on how long it takes to reach the trend line. Drags out longer into the first quarter here, then again, trend line will go a little higher. Same thing I said with the S&P 500. But I think they're both about to get this final push higher. I think that's going to take Bitcoin to 120 to 125,000. I think it will take S&P towards our trend line, which is currently in late January around 63.42, 41. Both of them, if it drags out beyond January, then it could go a little higher. The trend lines are the target, and this is interesting that it's intersecting the upper boundary here and the upper boundary here. And I wanted to show you this because, again, Bitcoin has a positive correlation with the stock market, and I think we have the 4 waves here. It looks like 4 waves to me. Sorry, it did move a little bit because I was moving it around a little bit, but it does look like 4 waves or 5 waves to me here, and I think we're getting this final. So I think this is the final by the dip, and I think we're going to get the final climax high, the final phase of the blow off top for Bitcoin, again, near these trend lines, the weekly time frame, the channels that I've been talking about. Take the time to show you that because, again, the channel and the wave counts very, very similar to Bitcoin, between Bitcoin and the S&P 500, but I think both of them are going to reach the trend line. Again, Bitcoin didn't reach it, S&P didn't reach it. I think they both will.